Hi and welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, head currency analyst. In this video, we're going to go through the week ahead analysis. We're going to check out some of the news events coming up this week, as well as some charts of interest. So, some central bank data coming out this week. It kicks it off with the RBA rate decision. Now, we have talked about the opportunity for the RBA to hike interest rates, and it looks like that has now been forecasted in here for a move from 4.1% to 4.35%. We also have the Bank of England rate announcement as well. BOE looking to hike rates from 5% to 5.25%. So both currencies could gain a little bit of strength before the event. Then after the event, we'll have to see how the market takes that information. Obviously, in the Australian market as well, you've got some manufacturing PMI out of China as well, which will affect the Australian dollar. But there could be a little bit of a rise before the event there. Bank of England, we'll have to see what the Bank of England Governor Bailey discusses after the event to see if they are going to continue to hike rates in the near future, or whether we're going to see them pause potentially. I think it's going to be more on the side that we are going to see maybe one more hike out of the Bank of England, perhaps heading towards that 5.5%. In the US, we've got some unemployment claims, ISM services, PMI data, but most importantly, we've got the NFP data at the end of this week. Potential to see a drop from 209 down to 200. It used to be typical that if anything was above 200 was usually seen as a positive sign for the non-farm employment change, but who knows what that will be like for this week. I think if we saw some negative numbers here, then it will back up a potential rate pause in the future. However, if we see some really strong labour market figures, then I think the Fed are going to have to consider, again, are they going to have to hike once more? And they really want to see the labour market start to loosen, and we need to see those numbers really starting to come down. Going on to the strength meter, I know I didn't feature the strength meter last week, but one currency of interest really is the Swiss franc. It is the strongest currency at the moment at +7, meaning that it's in that reversal zone. The last time it came into that area, we saw it drop away. So Swiss franc as a currency on its own could be an interesting one to watch going into this week, as it could be about to reverse in that strength, which could offer some traders opportunities. We also see the yen gaining some significant strength as well, and yeah, that could be something to consider watching, although I do feel like the yen monetary policy hasn't really changed. Obviously, it was just a very interesting week last week. We were coming into month-end flows. We're still going to have that, obviously, that month-end flow going into Monday's session. However, you know, typically in those sort of areas, we can get that sort of high volatility, and you know, that's what we saw going into last week. Going on to the US dollar index, then price has hit that $102 level, those previous lows. Now, we did get a short-term rejection of that. Have to wait and see if this is a confirmed rejection. What I would like to see is maybe another test of that 102 and another rejection. That could then signify some potential further downside for the US dollar going into this week. Obviously, employment figures and other pieces of data coming out are really going to have an impact on which way the dollar index could go. A break above 102 could see prices head up towards the 103, maybe even the 103.50 highs. Euro dollar then, so euro dollar at this supporting area at the 1.0950. We're also at this trend line support as well. So again, this is depending on how the US dollar reacts to that 102 level. Like I said, if we get a break down towards that 109.50 again, maybe a rejection, that could signify potential buyers. I do have this trend line resistance running through here as well, though. So really speaking, we could just get a bit of consolidation, maybe a breakout. But we are heading into August trading now. This is going to be a difficult month for traders. Similar thing with cable. Cable's kind of closed above those prior weekly highs. Now, obviously, we do have that rate decision out of the Bank of England, so that is going to really affect which way price goes here. I do like this sort of long-term trend line that I've put in on that weekly chart, so there could be an opportunity to see price trade a little bit lower before maybe seeing that kind of bounce back to the upside. So we'll be keeping an eye on that 1.28 sort of area. Does price trade through it, and if it does, do we get a retest of this trend line support? If not, and price starts to hold above it, then it could signify another move back to the 1.3. Finally then, CAD yen. So we liked CAD yen last week because of this strong bullish weekly candle here. Now we did get another move back down in to that 104.50. So if you were to look at this on a daily chart, you'll see like a double bottom pattern forming. So break of 107.50 could offer a move up to that 110 handle that we've been talking about for some time. So just something to consider there going forward on CAD yen from a technical perspective. Oil price is doing pretty well at the moment as well, so maybe the market is going to shift back into that risk on, and that yen is going to continue to weaken. So thanks for watching the video update. I really hope you enjoyed it. If you did, leave it a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.